Oh my goodness, the market is like free falling and no bottom is seen yet. As I like to mingle with different investing and trading communities, I found that there are three general misconceptions that I need to share in this video, as these three wrong mindsets to crash our portfolio lower. First misconception: if we hold long enough, we will still profit eventually. Wait, hey JM Investor, I thought in your last video you said time is our friend if you hold long enough. Yeah, please chill. What I mean here is I found many investors, traders, or rather gamblers when their stocks crash, such as PLTR, Unity, or Peloton. What I heard from them are just hold, they will recover soon or later. Just delete the apps. 2 years later, it will be back. To be honest, the only instrument that can hold long for 100% profit is only index ETF, such as DIA, SPY, and QQQ, or any similar ETF that tracking the index. Next will be the companies with superb fundamental, but they may not be the market leaders in the next bull cycle. There are still risks, but minimal to hold these companies for long. These stocks' price are supported by their revenue, net earning, and cash flow. However, for the speculative growth stock, which do not have profit yet, their previous price surge are supported by the two key factors. First, low interest rate environment. Fed was pumping a lot of liquidity during that period and managed to support high valuation of these speculative growth stocks. Second, hype, and more hype. Third, now Fed is tightening the monetary policy and their valuation cannot be supported. Once the stock is going down, those who bought the stocks because of the hype won't be able to hold for long. They will just panic sell or cut loss, which further tumbled the stocks. Let us see some examples. Teladoc Health TDOC tumbled 91% from the all-time high. Unity Software U tumbled 86% from the all-time high. Skillz SKLZ tumbled 97% from the all-time high. Arts Innovation ETF tumbled 79% from the all-time high. Palantir PLTR tumbled 86% from the all-time high. Nano Dimension NNDM tumbled 88% from the all-time high. Neo tumbled 83% from the all-time high. Even one of my favorite companies, Snap, tumbled 75%. Based on FinWith, these are their net profit as on 12 May 2022. All of these companies are considered speculative, as investors are anticipating they will be very profitable in the future. I do not know. Some may be yes, some may be no. Time will prove it. In addition, I also heard some worries that the current sort-off could be similar to year 2000 dot-com crash, where Nasdaq Composite Index tumbled for almost 80% from the all-time high. Based on today's data, as on 12 May 2022, Nasdaq Composite Index has down for almost 32%. If the current market would follow the dot-com crash, we still have almost another 50% downside movement to go. It is crazy, right? It means that the current portfolio will be further reduced by half or even more. In fact, I think we're already in the dot-com bubble clash, but it is mainly on the speculative growth stock. Let me show you the facts. During that period, as long as the company was associated with dot-com or internet, everyone would just hype and bought the stock. Investors speculated that internet was disruptive and their growth would be unlimited. In the hype, there were many technology stocks rose around 1000%, such as Qualcomm rose in value by 2619%. Then, after the bubble burst, Almost all stocks threw back their gains, some shut down, and some never recovered until today. For example, Yahoo. After the dot-com crash, it never be able to recover until year 2017. Then, it was acquired by Verizon. However, during this period, XPS already recovered from the dot-com and subprime mortgage crisis and achieved a 226% gain in year 2017. Not to mention that, there are many dot-com companies such as Pets.com, Webvan, and Boo.com were shut down and delisted. Yes, you may not know this company as we may still in kindergarten or primary school during the dot-com bubble crash and no one will remember the loser. Thus, the current crash of the speculative stocks are indeed very similar to the dot-com bubble crash. Instead of dot-com hype, many investors were hyped on 3D printing, fintech, disruptive technology, etc. Then, similar to the dot-com companies during the dot-com crash, most of them were down more than 80%. Similar, right? Thus, we never know which of these stocks will recover. Some may not. Thus, the risk is very high as we never know if we could bet the correct or the wrong one. Even they may recover, we would have to wait for the next cycle where Fed start to pump the liquidity into the market again. Hence, I will reiterate that holding a stock for long does not mean we will profit in the long run. In contrast, we may continue to bleed and lose everything. In addition, there are some cyclical stocks which I am not keen to hold for long as well. Take BSC as an example. Look on the past 18 years data. From year 2004, BSC indeed down 21% for 18 years. Means that if we hold for long for BSC, not only we do not gain any profit, we are losing instead. Please note that I do not consider dividend gain for this example. However, if you look its individual cycle, you will see that the move was big. For example, it dropped 94% during the subprime crisis. Then it recovered for 751% from the low, but then it crashed for another 74%. Next, two bull cycles gave almost 180% gain. Then the recent sell-off hit the stocks for 27%. Thus, for cyclical stocks, it is good to buy or short them for short to mid-term. It is similar to the oil stocks. Using SOM as an example, although seems that since year 2004, the gains looks good with 116% for 18 years. But if you look closely, the similar gain can be achieved from year 2004 to year 2006. Then it follows the cycle up and down. How about SPX? During the same period, the gain was 270%. For Nasdaq Composite Index, the gain was 430% in the same period. How about my favorite stock, Microsoft? The gain was 908%. Thus, not all stocks can hold for long, especially speculative stocks, hype stocks, and cyclical stocks. By the way, I was reluctant to prepare this topic, as I'm sure many people may be annoyed when they watch this video. Most investors are not feeling good during this sort of period, and what I shared here basically is to burst the hope. But I still think it's important for me to share this topic, as we are aimed to profit in the long run. Getting the concept right is indeed important for our future investment. Feel free to comment on your thoughts on how you overcome this bearish market. I will be sharing another 2 misconceptions that will crush our portfolio in the next video. Please give me a like if you gain any insight from my video and subscribe my channel if you would like to get my latest update. Thank you and see you in the next video.